of the things about starting up a business is that you have to prepare. You have to prepare. It's before many years ago, like back in the 30s and the 40s, a lot of people felt like, oh, I'm going to start up a business, and all they did was look at an empty space and say, I'm going to start it up there, and they would do it. But the truth of the matter is that the times have changed, and nowadays, in order for somebody to be successful, you have to prepare. So my notion is based upon that in order to be able to be successful in anything that we do, regardless of what it is, we always have to prepare, even for a trip. So my presentation is entitled The Entrepreneurial Workshop. And one of the reasons why throughout the days that we've been here, hearing different type of workshops, we heard about church planting, we also heard about the cooking demonstration, and we've gone through those workshops and learned just some of the reasons as to why the importance of being able to do church planting, to learn how to cook. And I think another aspect that is very important is also as far as the economy is concerned, and that is, God's economy. And when we read here, I took some quotes from the Spirit of Prophecy, and she says that the instruction is still being given. Move out of the cities, establish your sanitariums, your school and offices away from the centers of population. And I thought that this was very important to be able to, it says here, establish offices away from the centers of population. And this is based on the notion of country living, that she gives this advice. And in order to be able to, we always hear the message about move out to the country, but it has to be in tandem with everything else. So it says here, establish your sanitariums, establish your schools and your offices from the centers of population. So wherever it is that we go, we have to be able to establish these other centers, right? And it says that eventually that it says many now will plead to remain in the cities, but the time will come ere long when all who wish to avoid the sights and sounds of evil will move into the country, for wickedness and corruptions will increase to such a degree that the very atmosphere of the cities will seem to be polluted. And this we see, and I don't want to dwell too much on this, but it's just based on this notion for you to understand why it is that entrepreneurship, at least it seems it's a very integral part of country living. So in order to become an entrepreneur, the first thing that you have to come up with is a business idea. And how do you come up with a business idea is by you thinking of a new product or sometimes a new service that you feel that there is a need for it. And it's usually done not so much that we're reinventing the wheel, but we're making the wheel better. And it says here, develop a unique or better way to provide an existing product or service. And we see this in a lot of the businesses nowadays. I read the story about how Whole Foods got started, and Whole Foods didn't come up with anything new. It's just a supermarket, and the only niche that they focused on is to be able to provide organic food, and that's how they became successful. But of course, you have to also keep in mind that the success that came to Whole Foods, it wasn't overnight. It's a concept that was developed it's been developing over 20-something years. They started in 1983, I think. So a lot of times we only get to see the success at the very end and not from the struggles at the beginning. So we got to keep that in mind. Now, as I said, you first come up with a product or a service. And one of the ways that we know whether this product or service is that we say, what does it provide? What does it provide for the population? And those are the things that we're going to go and focus on. What the product or service that we come out, we have to ask ourselves these questions. What does it provide? And keep in mind also that I'm talking about business, but I think it also impacts also in the way that we do church. What does it provide? How is it different than others? Okay? So don't just look at it in the business aspect, but also as far as church is concerned. Who will buy it? Why will they buy it? Where are you going to sell it? And one of the most important things is, when will you be ready to sell it? Because you can come up with this bright, wonderful idea, but it may take a while. I know of a gentleman that some of us, especially Spanish people, we know how difficult it is to peel a plantain, a green banana. And this gentleman came with the concept of doing a plantain peeler. And he wanted to do this, but when he took it to manufacture here in the United States, it was very expensive. So it was going to be cost prohibitive. So he had to take it out of the country to be able to produce it. So it's very critical, when will you be ready to sell it? Because if you are looking to do, let's say, for example, you're going to be doing cookies. And you know that during the holidays, a lot of people eat cookies and do a lot of cakes and all of these other things. So you have to know that you got to time your product at the right time. So when will you be ready to sell it is very crucial. And also, how will you promote it and sell it, which are important also. So once you come up with this product or service that you've developed, now you have to focus on what it is that you're going to do. Are you going to start this business as a for-profit or as a nonprofit business? Those are the two different type of structures that you can practically give to a business. So, and I think one of the things that I know that I come across when I speak to people, that they think that the nonprofit means that you really don't make money. But that doesn't mean that you don't make money. It means that whatever money you make, you put back into the business. It always continues to revolve inside the business, as opposed to a for-profit. A for-profit usually takes the money from the business and can use it for their personal use to pay the employees, to pay the owner themselves. So once you determine whether you're going to do it as a for-profit or as a nonprofit business, then you have to focus on choosing a business structure. And I'm going to go over those items eventually later. I'm just giving you first a broad overview. And then you have to choose your business name and register your business name. I know that I was thinking of doing a business, and I was giving the different names that I was going to give my business. And when you think about it, it's like, I was like, okay, that didn't sound too good, right? Tamara DJ. It's like, I was thinking of the initials of my son's name, but it's like, okay, we don't want to call something DJ. So it's like, and give it a different, people are going to think differently. So choosing and registering your business name is another aspect of going into business. And then once you do that, you go forward and you have to go through the process of obtaining the proper credentials in order for you to be a legitimate business. And a lot of times I come across this, people are always don't know what process to go through. They go through obtaining a federal ID before they even register their name, and then they have to go back and make correction. So the process that I'm giving you is based upon the experience that I've had, and also what is the proper way to do it. So you obtain your federal ID, and you go forward and look for your local, state and local licensing and permits. And then once you said, okay, now I have all of these things together, now the next thing is that you develop a business plan. And it's very important to develop a business plan, because it is what gives you guidance and direction. When a builder builds a house, you see them looking at the plans, and they go based upon how that plan to build the house. And with a business, it's the same way. You gotta have a plan so that it can give you guidance and direction as to how your business is gonna go. But one thing that is for certain is that the business plan is never rigid. It's always changing. It's always ever evolving, because your business is always evolving. So, and also, when I said in the beginning, when I talk about these things, also think about it in the aspect of church. It's also, church is always ever evolving, because based upon whatever comes your way, you have to make adaptations. And one of the very critical points, and I'm always hammering this, is maintaining your books. It's very important to maintain your books. And you got to pay Uncle Sam, and Uncle Sam doesn't like to be cheated. And but it's not only Uncle Sam. Of course, as Christians, we're supposed to hold up the standards. But what happens is that I come across a lot of businesses that they come to that point that they've grown so much, and now they want to expand. But all throughout their business years, they've been keeping two sets of books. One of them that is the cash book, and the other one that is the one that they show to their accountants. So when they come to you and they say, well, I want to expand and I want to get money, and you say, okay, how much money have you made? And the books that they've shown the IRS has always have been negative, not making a profit, or making very little profit. So now here you come and you say, well, I want to expand because my business is growing, but your books are showing something else. So it's very difficult. And one of the things that we always drill is, show your business and show the real figures of your business, because sometimes you try to cover up, and later on it hurts you. So let's keep that in mind. So now the first aspect, like I said, is in being able to choose a business structure. And there are very many different business structures. The first one is a sole proprietor. And then I'll go into details into each one of them. Partnership, a corporation, and under the corporation is included this very new structure that has been around more in Europe, was used more in Europe, but now in the United States it has become popular. And it's called a limited liability company. And under that, there's also the limited liability partnership. And then, of course, the last one is a not-for-profit, or sometimes what is known also as a non-profit. So these business structures, sole proprietor is the first one. And with a sole proprietor is one of the simplest and most easiest way to get into business. All you have to do is say, for example, that you could be a plumber, and you say, I want to go into business, and you just say John Doe, and I'm going to be providing plumbing services. And you go, and you can go to anyone's house, and you go and you do the plumbing job. That's it. You're already in business. So there's no need to do anything as far as a sole proprietor. It's usually owned by one person, and benefits, or not the benefits, but one of the disadvantages of doing a sole proprietor is that the owner is always liable. So, and the reason that I'm giving there is because you're not legally separated from the business. So let's say, for example, that like I gave the example of the plumber. You say, I'm going to go into plumbing business, and you go into somebody's house, and for some reason, you do the plumbing and you do it wrong. And next thing you know, the person has a leak, and their whole house gets inundated. And the person says, well, you know what, it was your fault that I have all this water damage. So guess what? They sue you, and that person that sues you can go after all of your personal, or whatever it is that you own. They can go after it, your house, whatever. You're personally liable. And as far as your income is concerned, as a sole proprietor, you take all your earnings and you put them straight into your income taxes. There's no need for you to be separate or apart. You just bulk them in with your rest of your earnings, and usually it's found in the Schedule C, Z, or F. If none of you are familiar with this, I'm sure that it doesn't make any sense. But basically, it's you will find it in the 1040. And the one thing about a sole proprietor is that the moment that the person ceases to live, the business also dies. There's no continuity with a sole proprietor. Even if you say, my son will take over, your son will have to start over. Can continue the business as far as the clients are concerned, but that person will have to register as their own business. The next type of business is, of course, a partnership. And a partnership is very simple to understand. It is exactly what it says. A partnership is a business that is owned by two or more persons, okay? And with the partnership, it's very similar to a sole proprietor. Each person is going to be liable for whatever lawsuits they come upon. They're going to be liable for any damages. With a partnership, you have to have an agreement that will define the roles of each partners. I've come across situations where two people got into business, and what happened was that later on, there was no formal agreement. They said, come on, let's get together, let's open up this business. You know the business, I know the business, let's get together. And they started up a business, and there was no formal agreement written between both of them. And once you get a contract and you're in it, there's nothing that you're going to be able to do if one person tells you differently and tries to cheat you out of your fair share of earnings, because you never had an agreement. You can't go to the courts and say, I want restitution. So it's very important to be able to have a formal agreement as to with what you come in and what are going to be your responsibilities. As far as a partnership, every income, every loss, whatever it is, it goes straight into your taxes. You report it on your taxes, and there's no special filing that you need to do. And with a partnership, it's very similar to a sole proprietor. The moment that one of the partners passes away, the business will end, or one of the partners decides, I don't want to be no longer part of the deal. That's it. The business is over. So keep that in mind. With the next type of, the other type of business structure that there is a corporation. And under a corporation, it's an entity that is basically separate from the owners and from anyone that manages the business. And for this, you have to register as such. A corporation is authorized to sell, buy, inherit, do whatever it is that an individual would normally do, except that it is a corporation. And the corporation has legal rights. They have powers and duties just like an individual would have, except that it's an entity. Every type of debt and obligation is separate and apart from the owners. And this is one of the reasons why a lot of people rather go into a corporation, because they're not personally liable. So if somebody, let's say for example, even a restaurant that you know, all of us have frequented a restaurant, and you go to a restaurant, the restaurant, you may see, you know, the person that you see every time that you go there and say hi to them, and you know that they own the restaurant, but usually they will own it under a corporation. So if, say for example, that you ate those pancakes, and those pancakes make you sick, and for some reason you decide you want to sue, and you sue the corporation, and no matter what it is, it will end there. At the corporation level, the person cannot go into your personal assets. So when it says debts and obligations are distinctively the corporations, it ends with the corporation. Okay? But one of the things is that the liability will go into the owner if the owners guarantee a loan. Okay, I have, there's a lot of times when loans are made that the borrower will ask for a personal guarantee. And when they do a personal guarantee, that means that the person that is guaranteeing the loan will be liable for it, or if you have debt, fraud, or any type of negligence. And we've seen this with some of these cases that we've heard recently, like, of course, it's not so recent, but with Enron, that the executives there, based on the corporation, you know, they sort of try to sidestep their responsibility and say, oh, we're not liable, but if you do fraud, you're negligent, you will be held liable. So with a corporation is perpetual. There's no ending to a corporation. It continues with whoever it is that will be put in charge. So with this in mind, there are two types of different corporations. There's the C and the S. With the C corporation, what happens is that a lot of you pay your taxes on the corporate income tax. So if the corporation makes $200,000, you're going to pay taxes on those $200,000. And then when the corporation gives out and pays out its shareholders, if you get $50,000 of those $200,000, you have to pay $50,000 also on those earnings. So with a C corporation, there's always double taxation, what they call. So like I said, the corporation will file its own taxes, and so will the shareholders. The shareholders will pay taxes on their dividends. So this is what you hear sometimes. You may have heard double taxation. This is what it is. So what happens is that a lot of business owners, what they decide to do is that they form a corporation, but then they say, I want to be an S corporation. And with an S corporation, there's certain limitations to it as far as what the IRS expects from you. And as a corporation, there cannot be no more than 75 shareholders. Usually, most single business owners, like for example, if I say I want to go into business, I could be a corporation, but I'm a single holder, so I would go and file as an S corporation. But in order to be able to do this, you got to get permission from Uncle Sam to be able to be considered as an S corporation. And you usually have to take you have to do that, like it says here. You must obtain that particular tax status within 2 months and 15 days after the beginning of the tax year. So it has to be done within the first year of you being in business. Like I said, the advantage of that is that the person pay taxes only on the income that you make. So if, like I said back again, if the corporation made $200,000, you're not going to be taxed on that. It's going to be based upon what you're going to earn as the corporation, and it's just a one-time taxation. With an S corporation, the profits and losses are passed straight to the owner. And it says here, if you need to do this, you need to make that election. You cannot. It's not something that you automatically say, oh, I'm an S corporation. And a lot of people have that misconception that the moment that they register as a corporation, they think that that's it, it's over and done with. But in order for you to be able to be considered as an S corporation, it's something that you have to declare and you have to make an election. Otherwise, you're considered as a C corporation and you're going to have double taxation. In order to be able to be taxed as an S corporation, you have to make that election. You see there that it says you must file Form 2533 with the IRS. You have to file that form with the IRS, so then the IRS sees you as an S corporation. With an S corporation, you have very similar, you're very similar to a sole proprietor, so that whatever earnings, they go straight into your taxes, your personal taxes.
Okay, but the corporation, there's no tax.
There's no tax. You file only on your own. I mean, you still have to like do financials, but it's whatever earnings the company makes, it goes straight into, if you made $50,000 as a corporation, it goes straight into your personal taxes, and you get taxed at your rate, not at the corporation and then at the personal. So we were going over the corporations, and one of the other corporations is the limited liability company. And this has become very popular. Like I said, everybody, when everyone calls, they say, oh, I want to be an LLC, I want to be an LLC. And one of the benefits as to why they want to become an LLC is because limited liability company covers a corporation. It takes on the attributes of a corporation and a partnership. So you are a corporation in the fact that the liability stops at the corporation. And you become a partnership because it provides you with the flexibility of a partnership. So that means that, you know, you can limit your liability, but at the same time, you don't have to go through your shareholders and all of that in order to be able to get approval to do anything. You can manage your business easier. And the owners, like it says here, the owners are members, which can be one owner, it can be multiple owners, or it could be a corporation that owns that LLC. And you see this a lot. And maybe you don't know it, but let's say, for example, that there's a building, somebody owns a building and they rent out apartments. What they normally do is that a bigger corporation would own them. And then that corporation decides to make an LLC specifically for that management of that building. So it could be multiple owners, a corporation, or even a foreign company that could own an LLC. With an LLC, it's the same thing. There's unlimited life. You don't have to worry about the corporation ending when the owner dies. It can continue, or there could be a definite time period for the corporation to end. And now, some of the other benefits of an LLC is that it provides tax efficiencies. What this means is that the IRS will look at an LLC and say, well, it can either be taxed as a corporation, a partnership, or a sole proprietor. But that can only be done if you choose to do so. So I've talked to accountants, and sometimes the accountants don't like the LLC because of the complexities of the tax filing. Because, like I said, you can either be a corporation, you can be a partnership, or you can be a sole proprietor. But in order to be able to do that, you have to also ask to be treated as such. So if there are many members that own the LLC, so let's say, for example, that I and Sister Michelle own the LLC, we're treated as a partnership. We're not seen as an individual. So what happens is that it says here, like, a multi-member LLC can either be a partnership or a corporation. And as a corporation, you can also be an S corporation. But in order to do that, you have to ask to be recognized as such. And if you're not asked to be recognized, the IRS only sees you as a partnership. In order for you, if I own the LLC all by myself, I would have to ask the IRS to recognize me as a sole proprietor. And with that, what happens is of course, that you get the benefits of your taxes, of your earnings going straight into your personal taxes. Another type of business is a limited liability partnership, and which means that the financial liability is limited to the investment that each of the partners make in the business. So there isn't too much of a difference between a regular partnership, except that with this one, you are a corporation, and one person must control the firm and be responsible for all of its debts and obligation. Okay, one partner has to give up all their rights to managing the business. So there's only one partner that can only be in charge with this limited partnership, as opposed to the other one that I mentioned before, where you have an agreement on how to manage the business. And the partnership, you don't pay taxes as a corporation, but you pay it as regular partners. And one of the other aspects is that the business the life of the business is limited to whatever the partnership stipulate in their agreement. Moving on to not-for-profit or nonprofit, and I know that sometimes a lot of us entertain some of these ideas as far as ministry is concerned, that we say we want to, do this type of ministry or that type of ministry, and sometimes we think that because it's not-for-profit that we are not obligated to the rules and regulations of the other businesses, but they are. It's a corporation, and the IRS treats it as a business. Here with the not-for-profit, and I'm sure a lot of you hear not-for-profit and nonprofit, in the eyes of the federal government as well as the state government, there is no distinction between none of those two. It's a not-for-profit and a nonprofit. They see it all the same. Okay? And one of the differences that is very critical, and I think a lot of you will be able to have a better idea as to when you see not-for-profit and when it's nonprofit. And here it reads that according to the IRS, a not-for-profit refers to a specific activity, such as a hobby. Where I live, we have a lake association. Okay, and they call themselves not-for-profit. So something like that is a not-for-profit. On nonprofit, the IRS sees it as an organization that is established for the purposes other than turning a profit. And this is what I was referring to you before. It doesn't necessarily mean that you're not going to make any money. It just means that everything goes back into the business, and you keep on circling and circling it back into the business. And this is where a lot of charitable organizations, they register themselves as nonprofit, and churches are nonprofit. So with these nonprofit organization, no one owns the organization, okay? Even the person that started that organization doesn't own it. The person that manages the board of directors, they're the ones that dictate how the business runs. There's a lot of people that start up I want to start a nonprofit because I want to give to the poor. And then they start it and they hold on to it, and to the point that they bring it into the red. I knew that there's a very popular dance company in the city, and the guy founded Alvin Out. Yes. And what happens is that sometimes they own it, they start it, and they feel that they own it, and they want to continue running it regardless of whether it's making, regardless of whether it's serving its purpose. And they feel that since I started it, I should have control over it. But it says here that the board of directors, they're the ones that are responsible, and they're the ones that are accountable for the management as well as the oversight of the organization. So we got to keep that always in mind. With a nonprofit, there is no personal liability for the members. That's why there's insurance. So in case if anything were to happen, but it's the organization is not personally responsible. But one of the things, regardless of it, with the nonprofit, they must file with the IRS and with the state in order to be tax exempt. And these things that I'm bringing out to you, I'm bringing it out to you because these are some of the issues that you come across as you start a business or if you start church. We came upon some of these issues that we were learning and learning that these are some of the things that we need to meet in order to be able to continue in structuring the church properly. So if you want to be tax exempt, you have to ask the IRS, which is the federal government, and the state to be tax exempt. Now, as far as your requirements in the IRS will ask you to file forms in order to show how much money you're bringing in. And here it says that anything that if you have receipts of more than $25,000, you have to file a form with the IRS. And whatever state agency oversees your nonprofits, you have to file with them. It doesn't necessarily mean that you're going to be paying taxes, but they need to see what you're bringing in. And one of the advantages of a nonprofit is that it has also is a perpetual. It won't die because the board of directors are the ones that oversee it. And like I mentioned to you before, if you're a founder of the organization, and unless if you want to hold on to it, you hold on to it and you bring it down. But otherwise, usually it will continue because of the board of directors. Now here we come to the nitty-gritty of what you do now that you decided that you want to go into business, and you said, oh, I want to go into business. I know what kind of business structure I want to give my business. Now you have to determine the name that you want to give your business. And as a sole proprietor, like I was saying, if the name is anything other than your personal name, let's say, for example, that I say, oh, well, I'm gonna do taxes and I'm gonna charge $50 to do taxes, and somebody pays me $50 in my name, I'm a sole proprietor. I just make my earnings, put it straight into my Schedule C, and it's the end of that. But if I say Martha's Tax Accounting Services, that's it. I now have to register my business. I have to make it legitimate, and I have to do a certificate of doing business under an assumed name. And that is what is expected from you in order to, the moment that you're no longer using your personal name, you have to register as a business with your local county clerk. As a partnership, you have to file a certificate of conducting business, because this business is going to be whatever Joe and Dan's plumbing service. So it's going to be going under that name, and they have to be registered as a business with your local county clerk. As a corporation, you need to register. You need to file what is called a certificate of incorporation, and that will apply to all the different type of corporations that I went through. And you have to register with the governing body of your state. In New York City, it's the Department of State that oversees that aspect of registering corporations. In New Jersey, it's the Department of Treasury. So every single state has a different agency that oversees it, so you would have to check with your local state rules in order to determine that. So once you decide what your name, what business structure you're going to give, what is going to be the name of your business, and you decide to register your business, now you go forward and you get your federal employee number. As a sole proprietor, most of the times, like I said to you before, if you use your own name, you don't need to get a federal ID number. You just go ahead, use your Social Security, whatever earnings they make, it goes straight into your Social Security, because it makes sense. You're going to be filing under your 1040, right? So now if you have employees, then you have to get a federal ID. So it's very important to be able to understand that you can be a sole proprietor, but the moment that you have employees, you have to get a federal ID. As a partnership, there's no specific federal number that is required. As long as you file a form with the IRS, they will, all of the earnings of the businesses are given to each respective partner, so it goes straight into your taxes. Okay, and if one of the partners is treated as an employee, then you always have to get a federal ID. So keep this in mind. As a corporation, it's the only one that they do require for you to get a federal ID number, okay? And you need to have that because you're a separate entity, and the IRS needs to associate a name with a tax ID. And of course, if none of you know where to go, you can go to the irs.gov to get a federal ID. And it's very simple, the process. Once you determine, okay, now I have all these things, I have my name, I register my business, and I've got the federal ID, now you have to determine whether you need any specific licenses or permits to do this. Most of the time, a business doesn't need to get a federal license or permit because only specific industries will require for you to get a license. So let's say, for example, if any one of us were to be dealing in television, radio or television broadcasting, then you require a federal license. If you're going to be doing trucking and transportation, then you're going to require a license. But for the most part, most businesses do not require federal licensing. One other important aspect right now that I see a lot of businesses with so much going on in the internet that they do require to patent, to trademark their intellectual property, and it's usually has to be done at the federal level to do this. So as far as state and licensings that are required, a lot of people that do, let's say for example, all of us go to a hair salon. And a lot of us don't know that hair salon requires a special license and a permit in order to be in business. And they not only need to have their own licenses, that is called an occupational license. A lot of us, how about dentists, right? A lot of us have to go to the dentist or the eye clinic, and these are certain professions that require their own license and their own permits. And they need to get that before they can even start and open up a business. And let's say, for example, if you see a restaurant requires license and permits as far as from the health department, from environmental departments, especially in New York City, as we know, that there's a lot of regulations. And another aspect is that you do, especially, I know that in New York City, we do collect sales tax. And you require a permit. A lot of people may not know this, but you do require a permit to be able to collect sales tax because you're acting as an agent for the state. So if you also are sometimes employ people, you need a permit to be able to employ that person, and usually it requires a special permit to be an employee. So, and then also at the local level, you will have to check with your local agencies to determine if you do need a specific license or permit. A lot of times we see home businesses being operated, so if you have a daycare, you need to get a special license and permit from your local organization. I went over this, and as far as occupational licenses, I'm giving some of the websites that have specific information as far as whether to determine if you need an occupational license, if you need a sales license, even when we see the person in the flea market. A lot of people go to farmers markets, flea markets, and that person that is sitting there needs to have a sales permit if they're collecting sales tax. And of course, like I mentioned, the employer. There's a lot of responsibilities that are involved when you employ somebody. And if you don't do it properly, there's what we call penalties. And sometimes these penalties, I've had cases where people call and tell me, if I have to pay this penalty, I'll be out of business, because it's in the thousands of dollars and more than what they earn in their business. But if you don't do the proper thing, if you don't pay workers' compensation, if you don't withhold the proper amount of taxes, when they do come down on you, the Department of Labor, they come down on you very harsh, and it could wipe some people out of business. And I've had to deal with situations like that. And what's very important in order for you to, when you hire somebody, is that you got to make sure that that person is a citizen of the United States or a resident alien. And you have to, and one of the things is that they do require for you to file these forms and verify, because if you have somebody employed and you haven't verified and somebody reports you or something like that, these are forms that you don't have to submit to the government, but when the government comes knocking on your door, you have to show proof that you have these forms. Otherwise, you're going to be in big trouble. And these are just very simple forms that are available on the website that you can get. And One thing that I do recommend if you're going to go into business is to check with your local state and ask for what are the requirements for me when I hire somebody new. So that way you can get the proper documentation and you'll be able to be in compliance. I know that here with the state of New Jersey, once you hire somebody, you have to report them. And one of the reasons why they ask you to report them, to report the person that you hire, is because a lot of us, I know it's nobody here, but there's a lot of deadbeat dads, what they call that, and a lot of, from divorce, from families that have divorced, and now they have to pay child support. And a lot of people try to hide their salaries, but what these states have done is that as soon as you hire somebody, even before you hire them, if you know you're going to hire that person, you're supposed to submit that person's name, Social Security, all of that documentation to the state, and the state will send you a letter telling you if that person needs to get withheld child support, they're going to let you know. If that person is in the clear, you won't hear anything on it, but it has to be done. And if you don't do it within 20 days of hiring that person, once again, there's penalties. And that's the way the government treats us. The way for us to learn whether we've done something right or wrong is by penalties. They penalize you, and they penalize you heavily so that you can learn your lesson. And sometimes it's something that wipes a business out. I mean, it's like when we do something wrong, it's like as children, you get spanked or something in order to learn not to do it again. And the same thing happens with the government. They'll spank you so that you won't do it again. So now I'm going to go into some of the aspects of once you've already gone through all those steps, now you're going to do the business plan. And like I said to you before, why is it important to do a business plan? Because the business plan is going to give you, the business plan is a blueprint, basically, of how you're going to take your business forward. And like I said to you before, it's also something that when we got together and we decided that we were going to do worship at home, and we started to formally get organized, one of the things that we needed to do was not just like say, okay, well, we're going to do church and we're going to do it, we're going to go based upon how things go. No, there was structure. There's all these things that go behind the scene that maybe a lot of people don't see on the outside. And it happens the same thing with a business. When you come in and you buy a product from the store, you don't see what's going on behind the scenes. But that person has to think it through and move through all of these processes in order to be able to be there in business. And it's important to be able to have a plan, to have a goal where you're going to reach and how you're going to take your business there. So in case if you do get sidetracked, you know what you need to do to come back. So like I said, as a business plan, it's very important to be able to know what is the company, your product, or your service. These are all things that when you look at a business plan, these are the things that you need to have a clear concept about. A lot of us, when we go into business and we're looking to business, a lot of us don't have money to go into business, and we need to get financing. And a lot of people come, and I hear all these phone calls, all these past few months we've been hearing calls and calls and calls of people say, I want to start up a business. I said, okay, so what kind of a business idea do you have? Do you have a business plan? Do you have, what are the things that you have to offer? Because I cannot give you money if you don't have something that is tangible, something that is feasible. And these are very important things, that you have to have a product or service. And then once you do this thing, then you look at what is going to be my organizational plan? How am I going to be able to operate my business? Who's going to be the people that are going to be behind the scenes supporting me? And as some of us may know, right, Lloyd, Doug, that sometimes when you have a business, you're wearing many hats. You are the person that pays the bill. If you have a restaurant, you know that you're the person that is the cook, the chef. You're the cook. You're the busboy. You're the janitor. You're everything, because a lot of times many small businesses cannot have a management team, but it's important to have one. And I'm talking as far as somebody to be able to manage your books for you, somebody to be able to do other aspects of your business for you, because if you are wearing many hats, you know what happens? That a lot of times you can't grow, you can't move forward. And we see this also in church. If we have only 2 or 3 people that are constantly doing every single aspect of the church management, you'll see that your church cannot grow, and you need to be able to delegate some of the other responsibilities to others. So the management team is very important. And with this management team comes the marketing plan. The marketing plan is something that will tell you who your market is and what it is, how you're going to reach that market. You have to have a strategy in order to be able to reach that market. And one other important aspect of your business plan is the financial plan. You have to know how you're going to be able to, if you're going to look for money, what it is that you're going to do to support those figures that you're asking. And one important aspect, of course, is the financial projections, because even if you're not looking for money and you have money to start your business, you have to say to yourself, how much money am I going to make in selling this bar of soap? Or how much money am I going to make in selling this Living Green? And it's important because you need to know. If you're putting in $100 to make that one product, you need to know how much you're going to be able to charge to get back some of the money. So financial projections are a very important part of a business. And like I said, once you have a company and a product and a service, the part of the business plan is to be able to make sure that you, in your cover sheet, you're going to have your name of the business. You're going to have who are the owners of the business and where do they live, of course, because somebody has to come, they got to come after whoever's backing that loan. And of course, once you do your business plan, it's a table of contents, which is like all of us have done a report, and we know that these are some of the key points where you're going to list everything else that is going to be contained in your business plan. And the executive summary is very important when you look at a business plan. Usually a business plan when you make a business plan, is usually between 15 to 25 pages. And a lot of times these people that are evaluating a business plan, they don't have time to sit there and look at all the reports. And this is one of the things that is very critical, because I know all of us did reports, and we think that our professors read all of our reports. They didn't. It's like they just look at the most important part of the report. And the same thing happens with the business plan. You look at the most important part of the business plan, and in there you're going to be able to have an idea as to how this business is going to go. And in the executive summary, you're going to have an overview of the whole entire business, and you're going to make in there your argument for your business concept. And if you don't convince that person that is reading your business plan in the executive summary that you have something that is feasible, no matter how many pages you have behind there, it's not going to work. And one of the other critical parts is, of course, the numbers. And we go to this executive summary, and then you go to the numbers, and if those don't jive, then you can forget about the rest. So as part of the organizational plan, you have a business description where you're going to list the type of business that you have. What is going to be the business structure that you're going to have? And you list whether this is a startup organization, whether you are looking to expand, like I said to you before. If you're looking to expand, you also need a business plan. You need to convince a person how it is that this expansion is going to work. Or if you're purchasing a business. And just like anything else, you have to have a mission statement. When we did Covenant Advent, we decided to do a mission statement for Covenant Advent. And it's important, like I said to you before, whether if it's a for-profit or a non-profit, you need to have a mission statement. And then, of course, is like I said, the product and the service. What is your product, or what you're going to be serving, and where you're going to locate your business is very important, because if you're going to locate your business, there's a health food store that opened on 23, and you're familiar. You've probably seen it, Leah. It's right in the middle of practically nowhere. In order for you to get to it, you have to travel maybe like a quarter of a mile to make a U-turn to come back to it. And then when you go the other way, to go back the opposite way, you have to go like a quarter of a mile to get to it. So it's in a place where really not too many people can get access to it. And it's practically in the middle of nowhere, because all there is like an auto dealer and a plant store across from it. So it's not a place that can be fruitful. So business location is very important when you decide where you're going to locate your business. And another aspect is, of course, your management team. Your management team is also going to be the person, and your personnel team are the ones that are going to be the face for you. A lot of times when I'm sure all of us have gone to a store, and there's the employees there, and the employees, you try to ask for something, and it's like you're asking for a favor. And your personnel team is very critical, because they can make or break your business. So once you have another aspect of the business plan is the marketing plan. The marketing plan is very crucial, because a lot of people that I talk to, sometimes they have an idea, and it seems like a wonderful idea. There was this man that had, wipers go like this, right? And this man had an idea that he was coming up with a new wipers, and his wipers were going to go up and down. And he thought it was a brilliant idea, until somebody told him, what happens if those wipers get stuck in the middle and they cover the visibility of your driver? What are you going to do? So, that idea didn't go too far, because he didn't do a marketing plan that he thought that was there really a demand? Was there really a need for that? And you have to be able to analyze your market. You have to determine whether your product, what are going to be the features, what are going to be the benefits of your product, and who are going to be your customers. Who is it? Something that maybe, like we see with Whole Foods. Nobody would have thought that Whole Foods would have been successful, because it was seen like this hippie type of concept. But he saw that there was a type of customers that he could focus on, and he went forward and hit that type of market. What is going to be the geographic area that you're going to cover? Like I said, you can have a wonderful idea, and if you put it in the middle of nowhere, no one to come, it doesn't make any sense. So your geographic area is important. Who you're going to cover, how far you're going to go, the demographic characteristics of your customers is very important, because this hippie type of people that Whole Foods targeted was a demographic that was very specific, and they hit it big, but it happened over the years. What is the psychographic of your customers? Do they think the same way? And here we have a group of people that are believers, and they all think the same way. We all feel like, where's there a good vegan restaurant? And it's very difficult to find it, but here you have a psychographic characteristic of people that you can target. What are the lifestyles, tendencies of that market? And what are some of the environmental factors that affect that market that you're targeting? And one important thing is the competition. Who are your competitors? Do you know who else is out there doing the same thing that you're doing? So that way you can determine what are going to be the advantages and what are going to be your disadvantages. And that would determine what projections of sales do you think you're going to have. If you know that your competitor, like in the city, in New York City, you can go in every block and you can find a grocery store. You can find 2 or 3 grocery stores right next to each other. And yet they all make money, they all stay in business. And is it, what is it going to be the sales? Why? Because there's a high demand of population. So each of them can compete side by side. It doesn't matter because there is sufficient people to go around. And your market plan is going to also determine what is going to be your sales strategy and what is going to be your promotion, right? One of the very critical points of financial planning is what is going to be your sources and usages of funds. And this is a critical part of a business. A lot of people worry about, making the store look nice and all, but they don't worry about the financial aspect of it. What happens with how much money am I going to need to go into business? How much of that money is going to go into the product? How much of it is going to go into outfitting the building, or all of those other aspects of it? And you got to think about that. You got to think about those things, because otherwise, I've seen people that they put money. They say, I put money into the business. I've already put 100,000. I need another 100,000 to get this business started. And when are you going to stop? Because you never planned properly. What was it going to be, the usages and of your funds? And once you are into your financial planning, you have to include in there your balance sheet, and these are all projected. How much are you going to, your break even? How much is it going to cost you to develop that one product where you're going to break even? If you need to sell 100 patties in order to make the money that you put into making that patty, you got to know that you're going to need 100. You need to know that you're going to need to sell 100 patties to make your money back. So break-even analysis is very important. And with that comes how much money you're going to think you're going to make by selling these patties. And how much money is going to come in and out of your business, cash flow statements, and of course, your financial assumptions. And these are all things that that are very critical that we look at in determining the validity of a business. If none of these things are coherent, then you can forget about trying to get any type of funding. And one very critical aspect is also, once you're already in business, you have to maintain your books. Your books are very critical to the upkeeping of your business, because sometimes I've known certain people that they're in business and they pay their bills, and the money comes, they pay their bills, they just like that. Money comes in, they pay their bills, and then you ask them, it's like, so is your business profitable? And they say, I don't know. And you say, but I'm paying my bills, so it's okay for them. They just continue because they don't have any type of record of how their books are. And when you are into business, one thing that is very critical is to maintain separate records. Don't mix your personal with your business. Don't mix your business with your personal. There's always accountability is very important. And when you do this, you open up a business bank account. You have your name, you have your Social Security, go and open up a business account. And why is it important? Because it's going to help you maintain good records. And these good records are going to help you to monitor the financial progress of your business. You need to know how much your business is doing. You need to determine whether whether you are, like I said to you before, whether you're profitable or you're putting too much money into your business and you don't know how much money you're putting. And what happens is that once you have these good record keeping, it's easy for you to prepare your financial statements. You don't have to worry about it. There's a very good software which is called QuickBooks that makes life easier for everybody. And then another aspect is to be able to identify from where your money is coming from. If your Living Green is selling the most, you know that that's what you have to continue putting out there. If you know that your lip balm is not selling, then you're like, okay, this is something that I can't continue putting money. I have to, what is my source of income? That's my strength. That's the one that I'm going to keep on putting out there. It helps keep track of your expenses. Like I said, sometimes a lot of people when they mix both of them, their business and their personal, they don't know how much money they're putting in. They're putting in and they're putting in and they can't keep track of their expenses. So it's very important, and it makes it easy for you to prepare your taxes. And once you do that, you're able to also report back to the IRS on your tax returns. And one very important aspect is that you get to keep track of what taxes are due for you, what taxes you have to pay, because sometimes we don't know that, oh, you have an employer, you're supposed to pay quarterly taxes. And if you don't know, like I said before, you're going to get penalized for that. Or if you have to return back your sales taxes that you collected, you need to make sure that you return them in the appropriate time. So it's very important for you to maintain your books, know what is your employer's responsibility, send back your quarterly taxes on time, give your W-2s to your employees. And also what happens is that sometimes there's what we call an audit. I don't know if any of you have been audited, but it's something that nobody wants to do. Nobody wants to be audited. And if you're audited, guess what? The IRS is gonna, if you say, I spent $5 on a trip that I had to make to take a taxi, and you put it down, and when the IRS comes and audits you, they want to see that $5 that you spent. And if you don't have it, you're in trouble. But you have to maintain good records, so that way, if anything happens and you get audited, or if your employers, if you're saying that you employ certain people and you are paying them X number of dollars and you're not, it's like the record keeping will be the proof in the pudding, like they say. And if you don't comply, then you're going to be subject to some penalties. And as an employer, the burden is very heavy on the employer when they don't comply with the rules and regulations that the government has. And if you're self-employed, there's also rules and regulations that you must meet. And this, you're responsible for paying your taxes. And whether your employer gives you a W-2 or not, you have to know what you're responsible for. Because sometimes when Social Security time comes and people feel like, oh, but why can't I get Social Security? Well, you never put into the pot. You're not going to be able to get anything back. And these are some of the websites that I put there for you that I think are critical, that sometimes will help you as far as starting up a business, and they're very helpful. There's a lot of services that are available free from the government, because I'm sure that a lot of you have heard that how difficult the economy is, and a lot of times a lot of people have been out of work for many months, years sometimes. And a lot of people, what they do is that they determine that they're going to start their own business. And as starting your own business, people don't know what to do. And there are sources out there. There are sources in every single state. There's an economic development office to try to help stimulate your business. and to get you employed and to create jobs, and they're out there that are available for you for free, and take advantage of them. If you fail to plan, you plan to fail. And that I say to a lot of people, and it also holds true even with church. If you fail to plan, you're going to plan to fail. And you have to remember that. God is a God of order, and he expects us to maintain all of our business orderly. And with that, I conclude my presentation, and I hope that it was, in some aspect, enlightening to you, and that you may be able to go forward and try to do some business.